Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to work our way through the dollar, yields, precious metals, and commodities and ETFs that I follow. I'm going to give you my financial opinions around all this different stuff. And if you guys need any help with anything stock market related, commodities related, whatever it is, join our community, finding-value.com, become a platinum member. You can ask me questions directly during our question and answer session that we've got on Sunday at 5 p.m. Mountain Standard Time. So let's dive in. Let's take a look and see what the markets are doing. We've got the DXY, the relative dollar strength. It's down today, well, more or less flat, 0.12%. And we've been bouncing off this longer-term support level. This is a very strong support level. We used it all as support through all these different areas, all through here. So it's a strong support level that we've backed up to, and we've been bouncing off of it. We bounced off it here. We bounced off it again. Is this going to crack and break to the downside, or are we going to strengthen with higher yields in relationship to other currencies and our currency strengthen? I think the natural tendency is the dollar wants to fall. That's the natural tendency of all of the things that people are doing to the currency. Let's put it that way. But I think they also are trying to raise rates to have the effect or to have the facade of a stronger dollar in relationship to other currencies. They're going to do that. They're going to print money. They're going to have a weaker dollar, I think, overall, like an absolute value. And then they're going to raise rates and try to get it stronger on a relative basis versus other currencies. So yeah, they're all printing, but they're trying to relatively price others out of the market for commodities or whatever it is. I think that's kind of what they're trying to do. It doesn't mean they'll be successful doing it. And I do think eventually the DXY will go down because we're going to hit weakness in the markets at some point. I don't know when that point is. And then the dollar will fall with interest rates. So interest rates, they've pulled back a little bit today, 1.6% on the 10-year. And again, the correlation here is gold likes yields that go down, especially when the curve uninverts. So we see the 10-year falling faster than the 30-year. So we're down 1.6% on the 10-year. And then the 30-year, we're only down 0.95. So when we look at the ratio of this curve kind of uninverting, think of it as a gauge of fear, because people run back into bonds when fear comes about, when recession fears and whatever. And I'm not saying that I know that a recession is 100% coming, or if the recession is behind us, very well could be. We could have already gone through one, or we're going through one. Hard to say until after the fact and you get all the measurements. But right now, we've got the curve uninverting a little bit. It doesn't mean it can't, invert again. So we're kind of at that spot where everybody doesn't know what's going to go down in the short term. So the TYX-TNX ratio, it was up a little bit today. Gold likes that. Precious metals like that to some extent. And they usually go higher under those market conditions. They're not huge market conditions because the dollar was basically flat, and then your 10-year was down and your 30-year was down a little bit. Bond price is up a little bit. It goes opposite of those yields. So we're looking at how the yield curve is moving around. Historically, if you take the last 40 years, though, we've seen a relationship between lower bond prices or higher bond prices, lower yields, and higher gold price. So gold price and bond yields kind of moved together historically. But in the 1970s, that relationship broke apart. And if yields continue higher here, we can see this relationship break apart given a strong inflationary environment. So this relationship is still intact. It hasn't broken apart yet, but it can at any point. So just to keep that in mind, we're seeing the 2-year yield here really starting to fall. It's down 2.33%. So the short end of the curve fell more than the long end of the curve. here recently. And this is a pretty big down day, so we could see further downside in the 2-year yield and these shorter term yields. That is the curve on inverting. That curve on inverting is going to put pressure or a lift to precious metals to the upside. So we'll look at that from that paradigm or perspective. Yields look like they could go down a little bit. The CRB index also heading lower. This is also lining up with that fear that could potentially be grasping the markets. And again, I'm not saying it's like long-term fear. It's just short-term fear. Generally, when people get fearful, they buy bonds, especially the short end, and that's what's coming back down. And sometimes under those market conditions, oil doesn't like it, and neither does some of the other commodities. And this is the CRB index, and it doesn't like it. It's showing you it doesn't like it. It's going down in the short term. Now, again, we've hit this resistance area. We've hit it a bunch. The blue line's that resistance area. Let's back out a little bit. So it's this blue line in the middle, and we've used it as support all over the place through here. We also have another trend line there that is coming up, which we've broken to the downside. So we're on the downside of this upward trend. And we've been bouncing sideways here, basically bouncing between a few support levels. Right now, the fear's kicked up in the very short term. It doesn't mean that fear can't reside quickly and we move back to the upside. But I'll show you kind of where other commodities are lying, and you can see maybe how far back we can pull back here in the short term. CRB to S&P 500 pulled back a little bit today, so commodities a little bit weaker than the S&P 500. But again, big picture view, we've broken that trend line to the upside. We're getting our first pullback, and then wave 3 comes, and that's the party wave, guys. That's when the party bus with all the people blowing the horns. That's when wave 3 is coming. All those people will be buying commodity shares. Hopefully, we're already locked and loaded to drive this into overdrive. We need credit expansion to continue to be created. We have that from the housing market. Janet Yellen even said something about controlling credit and lending in the markets to slow inflation. They know where it's coming from. So we'll see what happens there. Gold up $10. I'm in the bullish camp. I know there's some people saying there's some bears out there. Oh, it's at all-time highs. Definitely sell it off. I'm in the bull camp, guys. I think gold's going to go much, much higher, given the market conditions and where we are with the TYX-TNX ratio. Generally, when gold outperforms, it's during these market conditions. Then when they reflate, so what will happen here, gold's going to take off like it has. It's going to continue higher, just like it did in 2018 and 2019. And then at some point, we're going to have a problem, potentially, commercial real estate. I don't know what it is. Who knows what it is? And then they're going to have to print money to solve the problem. Once they print that money, gold's going to go ballistic for 4 or 5 months. It will outperform. And then oil and all the other guys are just going to go ballistic. They're going to go ballistic to the upside. We could get an everything rally at that point where gold, silver, all this stuff. They're already printing money. They're already putting stuff on the bank's balance sheets. They're already kind of doing it. Gold's already noticing that. And they're printing more money, putting more stuff on the balance sheet. That obviously, that money doesn't just come from nowhere. It gets created. So there is that going on, and I'm bullish. I'm in the bullish camp. I have yellow fever. Silver, still looking all right. We're getting a little bit of weakness here. You can see selling pressure to buying pressure. More selling pressure, and it's kind of rolling over. Could we get a pullback, a further pullback to the downside? Yes, it's very much possible. You guys should be hoping for that to get you another buying opportunity in these precious metals. Platinum still remaining quite resilient. We are seeing a little bit of a contraction in the opening and closing prices of these candlesticks. Big there, smaller yet. That is a form of momentum and velocity. It is slowing down, coming and hitting a resistance area. $1,100-ish area. There's a lot of areas that we've traded and turned at this location here. So we're in this gigantic resistance area where we're going to try to get through it. It's going to take some time. It might not take some time. We might just rip through it. So again, I've already purchased. I'm locked and loaded. Let's let this thing rip. I'm good for a big run out of platinum. Let's hope that momentum continues here, or we might slow down a little bit, move sideways to slightly lower, put ourselves a little handle, one of these loops or something like that. That'll happen here, and then break. Either way, it doesn't matter to me. I'm good to go. XAU to gold ratio coming back down. We're seeing a pullback in the gold and silver mining companies. So we are pulling back a little bit against gold. Just to show you there. GDX down 0.06. And remember, gold was up $10 an ounce. So on the ratio, it looks a little bit more dramatic than what it is. But we did pull back a little bit today in GDX and in SILJ down 0.18. Again, still looking good. We're probably doing a retest move before heading on higher. So everything looks good. Everything's intact. Just let it go. Let it go. Crude oil. We've been talking about crude oil. I haven't been the most bullish in the short term on crude oil, even though the barrel counters are all very bullish. I understand that there's also credit driving this bus. The credit from America, credit expansion, things happening in the banking system, banking crisis, all that stuff. There could be negative ramifications of it, and it would come out in crude oil. Crude oil also could be just doing a retest back here in the $74, $75 barrel range. We get a retest here. Great buying opportunity. We'll see what happens here. This could be a false breakout where we go a lot lower. I don't think that's the case, but guess what? It doesn't matter what I think. What matters is what happens, right? And we could see a further pullback to 74, 75. We're going to have to reevaluate at that time where this thing wants to go. I'm long. I've stayed long since the early 2020s. I don't see any reason why I should be selling. The barrel counters are saying that we're going to hit some pretty good deficits at the end of 2023. So right now, it's a battle between demand, supply in the world, and that demand is starting to outstrip supply here, versus the credit in the system and the recession, demand destruction from credit events in the system. Generally speaking, credit has been the driver historically, but that doesn't mean that having supply problems could also overwhelm the credit side. We just don't see that very often. I'll just put it that way. Natural gas also slightly lower, but it looks like we're really starting to bang out a bottom here. I mean, we've been hitting multiple times at this general location. So that would be a good spot to be looking at around $2. If it wants to head back down to $2, it's a pretty good spot to be looking for natural gas. XOP, yeah, you know me, down a little bit, 1.6%. Again, I don't think this looks like a great chart here. We hit the bottoms through here. It's a pretty strong trend line, and we've broken that trend line with good selling pressure back down. We've come back up, and we're putting in another larger selling pressure candlestick. So we could still see further downside in oil in the short term, in my opinion. And I think from a longer term perspective, the way that we look at this is a shoulder, a head, and then we get a shoulder that hits here. Right here is your buying opportunity, guys. I think if we hit that, I'm going to be foaming at the mouth. I'll be losing it. Probably can't sleep at night because it's going to be a really good entry point for a big move to the upside. If that plays out that way, it doesn't have to play out that way. This could be as far as we get back. I don't think it will be. I think we will get a little bit more of a pullback out of this. But again, I don't know the future. I don't know that path. But that's what my best guess is that we're going to get another shoulder. And then we're going to see oil pull back, uranium pull back. We're going to see gold and silver go higher. And then we can rotate in this location over here, wherever that is, if it's 5, 6, 7, 8, 10 months out, whatever it is. And then we're going to have a party time to the upside with oil just rocketing. that's when oil is going to go to $200, $300, $400 or wherever it goes. People, when I say it goes to that price, I'm talking about the end of the bull market. I'm not talking about 1 year from now. I'm talking about the end of the bull market, which could take some years to get there. I'm not talking immediately. Everybody gets so jacked up with like things happening within months. OIH also getting a little bit of selling pressure still, 1.5%. It's not horrible though. I mean, we were down 1.5%, but crude oil was down over 2%. I mean, that's not horrible. But again, this doesn't look like a strong chart. Show me the buying pressure, big green candlestick army. It's not there. There's more selling pressure. It kind of weak move up. This is kind of a flag pattern that could potentially go lower in the short term. But I just see it as a big buying opportunity, in my opinion. Sprott Physical Uranium Trust moving sideways. Still, I think the sellers are still have a little bit of an upper hand here. But again, we'll see. Uranium down 0.44%. Again, we could see another flag pattern that's coming here. We could break down in the short term, giving us a little bit better buying opportunity. I still own my uranium mining companies. I didn't sell anything. And I haven't really added much either here in the short term. I'm just waiting. So I'm waiting. Maybe we get one last pullback out of this bad boy and get one last big buying opportunity before the big move higher. TAN, again, this thing is just moving sideways, right in the corner there. Copper, COPX down 1.25%. Still doesn't look bad to me. Still looks good. We've had a rip here. And I think we're probably going to see like an ABC correction. Maybe we do a retest, and then we roll on higher. That would be another buying opportunity, in my opinion. Lithium down a little bit. Again, we came back to that resistance support level, getting rejected there. So we're down 3.14%. Not looking the best, but it doesn't look the worst ever. But I would say it doesn't look that great. More downside probably to come. REMX also following suit to the downside. It kind of put like a little trend line there that we've broken to the downside against that resistance line here. So yeah, I think more downside's possible here for REMX. The S&P 500 down a little bit, right on support. Nothing really, it doesn't look that bad. NASDAQ also down a little bit, but it's still hanging in there. It's not really getting sold off massively. It's got to make a decision on where it wants to go. It's just right at resistance. Emerging markets moving sideways. Still, it looks fine. We've broken the downtrend line. We're still holding. It's just moving sideways. XHB, the home builders, continuing to move higher. A little bit of a candlestick or wick at the top of that candlestick. And I don't think we're in a housing bubble because home builders are still very strong. I'm sorry, guys. Anyone who thinks we're in a housing bubble is flat out wrong. We are still at 1.42 million housing starts. The home builders are still building homes above average, and it hasn't broken down yet. So you're wrong until it breaks down. And if it goes higher, that means we're still in if we're above average, if we're at average or above, we're still in an expansionary phase of real estate. But it doesn't mean it can't break down. Looking at Moo, again, we're below this trend line. I still think that we could head lower. Back out here, we could come back to the support zone and then go. So I think that's what my best guess is for the VanEck Agribusiness ETF. Copper down a little bit today, down 1.33%. I still think that it looks fine. Yeah, we're having a little bit of a down day today, but we're still on top of this major support area of that line. There's lots of support in this general area that we can have if we were to go back and test that. Lumber is still moving on up, 2%, 427. I don't know why this isn't updating here, but still looks good, and we're still above the long-term trend. So that looks good. We've got iron ore. Yeah, it's down. We could head a little bit lower here in the short term. Come back to this, do a retest. Nickel moving sideways. Still looks fine to me. Still looks good. Aluminum down a little bit. But again, I look at aluminum from a big picture view. I think aluminum is going to go higher second half 2023, early 2024. That's when things get a little bit very tight with deficits. And we'll come into that at some point. And the prices will front run that deficit, I think. Baltic Dry Index still moving sideways, still looks good in my opinion, up 3.3%. Newcastle Coal up today 2.23%. That actually looks not too bad. But again, I think it's going to base out a little bit before we start heading higher. And this could be a shoulder, head, shoulder, and then the breakdown. Give it a little bit of time to base out. Ethereum sideways, 0.3%. That does look like it could head lower in the short term with this big selling pressure candlestick and then the small inverted bloody nose. And then Bitcoin, it's the same thing. I do think we could see a little bit of downside pressure in the short term with these large selling pressure candlesticks. But overall, guys, I mean, we just got to wait and see on oil, 75 bucks. It's probably where it's going to end up. If we get support there, I'm going to be a buyer. I mean, it's sitting on top of everything, and the market is tight. Now, the credit, we have to continue to watch yields. If yields continue to plummet, it could pull oil down with it. It could pull it below 75. That is a possibility. It could be a strong possibility. So I am still watching that. I'm not going to be a buyer until I start seeing strength at 75 and it starts to turn and buy into that strength. If we have lower yields, if people get scared and there's fear in the market, I think that gold is going to outperform. Gold, silver, platinum, the precious metals. I think that the yield curve will uninvert. And I think that those are the right market conditions for gold, silver, and platinum. I do not think that the other commodities will do well in that scenario. I think that we could pull back. I think that interest rates will eventually, they'll stop raising rates, they'll cut them, and then they print money, and then everything goes ballistic at that point after that. I don't think that the housing market is going to crash. I don't think there's going to be a deleveraging event. I think that it's going to be from somewhere else, and it could be a regular recession, much like 2000, 2001. And then we bottom, and then we rip it. I could be wrong, though. What's difficult is you don't know where this... I think we're in a recession. I just don't know when the end will be. The end could be now. The end could be now, and then we rip it. Maybe the end's in 6 months. Maybe the end's in 3 months. Maybe it's in 1 year. I don't know the length of what that looks like. I don't know what they're going to do with interest rates. I don't know if they're going to print money. I don't know if they're going to increase their balance sheets. There's a lot of things that can happen between now and any time in the future that could change my opinions very quickly. And it should change your opinions too. I'm not playing the short-term movements. I'm not playing those short-term things. That's not my game. My game is long-term. There's going to be deficits when and if they print money. I should say when they print money. Those monies will go into commodities. So I'm staying long commodities. I'm riding through this volatility that we're getting right now, hoping on the other side that it will pay very well for the patient investor. So that's what I'm seeing in the markets. Give me a thumb up for the content, guys. Subscribe to the channel. Subscribe to the website if you haven't. Love to have you in the community. And we'll catch you next time. This is Finding Value.